All righty. Good morning, everybody. Let's see, we do have a good amount of people here. Welcome. Hi, Abraham. It's been a while. I haven't seen you in a while. Thanks for coming in, and thanks for letting me know that you hear me. Morning, James. James, do you go by Jim or James? I just go off of what you write on your name. All right, I'll call you Jim. No worries, Abraham. At least you're here today, so that's cool. Thanks for coming out. All right, guys, welcome to the Hurley Investments Trade Findings and Adjustments. This is going to be a short and sweet one. Going to blame it on a little bit of being under the weather. You kind of hear my voice is really low. So kind of got a little bit of a cold. Don't know if that's COVID. Don't think it is, since I already had it recently, but that's just kind of how it is. All right, we are at February 17th today. What I've got written down here is from last time, which was 2 weeks ago. And apologies about last week. Kevin was supposed to take over, and for whatever reason, completely forgot about it, which is a little bit funny. But all I went over a couple weeks ago was the put option, just kind of basics on that, but I went into some serious detail. So if you want to revisit that, everything you need to know about the put option and kind of how it is actually performed in real life, as we've protected real shares of stock and talked through Facebook, and we even added a second set of puts on our Facebook shares to make even more on the way down. And man, we're looking absolutely awesome. Break support level, buy more puts, which is exactly what happened. It's down at 217 last I checked, fell below that 240 level. That was pretty cool. So very awesome to see that. What do I want to talk about today? So I want to go over and show a little bit about Disney. I did some serious due diligence last week as they had their earnings report. I think, was it Wednesday, Tuesday, whatever it was. And I took my family out for the entire week last week to Disneyland and watched the kiddos' eyes just completely light up and see all of the magic and all of the wonderful rides. It was pretty awesome. So, um, real quick, got a question that came in. I know you protect positions with earnings. Are you protecting positions post earnings, especially given the Ukraine uncertainty? So the short answer, Howard, is yes, but outside of earnings, it's kind of more looking at technicals and support and resistance levels and seeing how current news and current information is affecting the stock. We do have some positions like Apple and Bank of America protected that have already had earnings. Some, like you'll get to see for Disney, we've kind of let those go because had good earnings and are bullish still. So it's just kind of a depends sort of situation. So Disney, let's take a look. Update this from a few minutes ago. We're pretty much sitting right there, you can kind of see, I wish I could zoom in a little better here. There we go. Disney's basically flat for the day, bottomed out at 130, and then kind of came back into earnings, and then last week jumped on earnings. That's this black one right here, that black candle. Opened high and kind of came back down. Hit the support level on the 50-day and has been continuing up, but generally, you can kind of see the trend here. And look at a different chart. This is same Disney, but instead of a 200-day, that's this red one, 200-day simple moving average, and a 50-day, this blue one, simple moving average. I changed those on this chart to have a 5-day exponential moving average on this blue one here, and a 20-day exponential moving average on this red one. So that kind of shows us more near-term technical indication. So what are we looking at here? We are looking at, let me get a better color I can point with. Get my red pen out here. Can anyone tell me, just to see what you guys know, or can, if you don't know, guess, or if you know, whatever. What is this last kind of little bit showing us? Kind of look around here. What is this telling us technically about a Disney stock chart? Throw out a guess. I won't call your name out. Just throw out a guess. What is happening around here with Disney? I'll kind of make that a little smaller. All right, let me erase that. Is that helping anybody? Got one maybe reaching a turning point downward. So I'm not seeing where you're seeing a turning point. There might be some resistance here at that top, but that's not for a ways. So I wouldn't say that it's reaching a turning point right now. I think it reached a turning point here. Let me draw that a little better. And which way did it head at that point? All right, how about this? Oh, another comment. Resistance. Okay, so I kind of said that, but yes, might have a little resistance there, but that's not for a few dollars. It's not for a little ways. And we'll get to more resistance and support in a minute. I'm just kind of asking, what direction is this stock heading? Is it bearish, bullish, or sideways? William says bullish. And William, sorry I said I wouldn't mention your name, but you're correct. So I want to give you the credit there. Let me just circle some things here. Those three things are three indicators that give us a technically bullish stock. Oh, I missed one down here. That one kind of helps too, but not quite as important as the other three. So we're in a bullish trend. Turned bullish around here, here, and here. But generally we're going through a bullish trend. And on this one, typically I'm looking at this kind of chart where it's showing a 50 and 200 day, and kind of just because I'm looking at these charts a lot, I can kind of tell where things have become bullish without necessarily looking at this one, but heading up above a resistance level here, quite convincingly above that 50-day. This could be considered maybe a small resistance level, but just the fact that it so easily got above a 50-day, which I would consider a bigger resistance level from below coming up to it, that this is not going to be a huge concern. This is more of the resistance level, and it broke way above it, came down, tested it, so now it's a support level, and we're still in a bullish run. Where are we at on our market? Let me erase these. Market's down today, still. See that red mark there? Disney's breaking the trend of at least the day, and it's at least holding up where it's not too negative. It's just kind of right where it's opened, right? So, long story short, Disney, of course, had amazing earnings. Their parks are opening up more, and boy, was it busy last week when we were there. Yes, they still got those masks on the rides, but you know, it's kind of how it's been for most other places too. Masks inside, sort of thing. Hasn't hurt them recently. And of course, the earnings numbers show how much it's not hurting them. Everybody wants to get back to normal life, get back to some semblance of normal life, I guess, and getting on their vacations back to Disneyland. So we've got a bullish moving stock, technically had great earnings. They could get up to the next resistance level is going to be this 200-day, realistically speaking, up at 167.55. Past that, longer term, if you were to look at let's see where my longer term chart is going to be up at 200 and change. Yeah, you can see this top right here, 203 is how far they are off from their highs. So we got another $50-ish of profit that it can get up to. So I want to look at what are some bullish moving trades that you could place on Disney. throw out any answers you think you've got. What are some bullish moving trades or trades that will make money as the stock continues on a bullish trend? Howard says bull put spread. Right on. Let me write this as a question. All right. Howard says bull put. I'll put that down in a second. Let's start more simple. How about stock? How about buying the stock? Naked puts, bull call spread. Thank you, Howard. You mean naked short puts, I assume. I can also put in, oh, good, yes. Thank you, William. Leap calls. I want to add in a leap bull call. I'll even say bull call calendar. Leap bull call is just the same as a bull call spread, just longer time horizon in before your expiration. Naked short puts. Okay, I think we've got it. Bull put spread is another one. So stock ownership, leap long call, leap bull call calendar, bull call spread, naked short puts, bull put spread. All right, so just a quick note on these. These are all the ways that you guys can take advantage of a bullish moving stock. And I'm not necessarily going to go into detail on each one of these, but just that you have all of these options, pun intended, so to speak, that you can go with. And you can look at your own situation and decide, well, if I don't have quite enough capital or don't want to put all the money at risk for owning stock, I can choose maybe something else. If I'm looking to get into a stock position, maybe a naked short put might work. Just to kind of give yourself some thought process to go through, and for me to give you guys a glimpse into what we go through to and look into to decide what might be the best way to take advantage of a direction of a stock. So stock ownership, our rule of thumb, 300 shares at least. 300 shares. That way, when you go to protect it with your puts, and protect the value of that stock ownership, you've got a better chance of, if it falls, you have a better chance of making up enough on those puts to buy another 100 shares. So without going into all the math and the details, if you have 300 shares, you need it to go down roughly 30% for those puts to be worth enough to close and buy another 100 shares to dollar cost average your stock position. If you only have 100 shares, you need it to fall 50%. If you have 1,000 shares, you only need it to go down 10%. So the more the better. But as a rule of thumb, we like to stick at least 300. So that is a good one. Leap long call. All that is a long-term call option that goes out a year, usually, or more. Why is that important? Leap long call usually typically will cost about 10% of what it would cost otherwise to buy shares of stock. So your risk is 90% less. I'll write that. That gives you a little bit of better idea of being able to dollar cost average it. Hey, if I'm looking to buy 8 of these suckers, I'd add up the cost of 8 of them and just leave that amount of cash in your account. That gives you the ability to dollar cost average if you need to. And instead of starting with 8, you start with 2. Or if you're gonna plan on having 4, then you're leaving that amount of cash in your account and you're gonna buy 1. So that you have the money there to dollar cost average if you need to. But it's more volatile as a percentage than stock ownership typically. Give you an idea of what a leap call is like. This is kind of under a year, but fairly close. Let's look at January 24. So these are our calls over here. This is our option chain. These are our dates to expiration. And so you'd go over here on your calls, probably go a little further out of the money, not too far, but you don't necessarily have to go right at the money. You can give it a little room, make it cheaper. Here's our cost, 22.25 for this 165. Or 26.80 for this at the money 155, or close to at the money rather. So you're spending on one contract 26.80. That's 2,680 total for one contract, because you got to multiply by 100 shares, because this is the per share price of the stock. Even though we're not buying the stock, we're buying the option. That's just how they're priced. So that's that one. And that's one option. Leap bull calendar. So a leap bull calendar would look like say we bought one of these, and let's say we go out bull call. Of course, we'll have a long option, so that would be our long option. And then you've got to have a short option somewhere above the strike price of your long option. So our strike price on the long option was 155, so we got to go up higher. Where would you look to have that? Well, go back to your chart. You're out long enough where you've got plenty of room to run up to 200 if need, if it gets back up to recent highs of the last year or two. So I would at least have that short call probably above this next resistance, probably 175 or 80. So you'd look at 175, 180, 175, get you above there. And actually want to be short, so I want to sell that. And we just want to look at one. So $7.40-ish is getting paid down on this 25.90. Why would you not want to go closer with more credit? Well, because you got all this time. You go out almost 2 years, right, on this one, and you got $20 of upside. You'll make plenty of money if it gets called away up at 175. If it doesn't, though, you've lowered your cost basis by 740-ish, and a little less volatile, gives you something to protect to the downside. And of course, you can always roll it down if you're really nervous, but usually for something like this, I'd just kind of leave it alone, let it work its way through. And if it really goes down and the short call is just not worth very much anymore, you could take it off. You've already lowered your cost basis, and you can run it like just a single leap call, like the other one I showed you, and dollar cost average, or roll out for more credit and get another 175 for further out in time, or the situation gives you a lot of different options. So this is an interesting one we've done and used before, and you're really just using a short option that expires before your long option to lower your cost basis. All right, bull call spread. So bull call, you're looking usually at 60 to 90 days. So we'll look out to April. Let's see. Was hoping it would give me $1.50 increments, but it's not going to do that. So 160. It's either going to be 165 or 170 on the short side, but you're looking at probably 150 170, because that gets you, again, going back to your chart, 170 is up here. It's likely to get called away for, or it's likely to get all of the profit there up to the next resistance level at 167.55, and you'd be looking at something like that. Same expiration, long call 155, close to the money, short call 170. That's gonna be cheaper, but you got less time to make it work than you would if you had a long-term one. But it is another way to profit from a trend. Naked short put. So where would I put a naked short put? So if you remember, going back to our puts, a short put, if we're selling it, is going to give us the obligation to buy stock. So this is a really bad idea if you don't have the money to buy the stock if it gets put to you. So you're really going to only look at this as an option if you have the money to buy the stock at the strike price, if it comes to the point where the stock goes into the money. So as an example, if it goes below, if you have sold a 150 short put and the stock falls down, no matter how far down it goes, you're obligated to buy it at 150. But you do get paid premium. So I would look at maybe a month. So probably a March. I guess I can write some of these other things. Bull call. And I know I went out to April, that's only 56 days, but on that bull call, close enough kind of thing. Short put, 150. That's the calls. Sorry about that. Let's see. Short put, you bring in $3.30 going out a month. So that's the most you could make. But if the stock goes up, you will make all $3.30-ish cents. And if you're looking to get into the stock anyway, that is certainly one option. Have enough cash to buy the stock. So this is called, really more called a cash covered short put, because you have the cash to be able to buy it if the stock goes the wrong way. But you'll have lowered your cost basis by $3.30 per share if you choose to do that. Bull put spread. So bull put, that's really, you're not looking to buy the stock. So you have a long put against a short put, where the short put makes more credit than costs you on the long. So all you're trying to do is book some profit on that credit. And you don't need to worry about buying the stock as much because you have that long put against it. But this is where your short put is going to be at a strike price above the long put. Just to give you an example, probably looking at something like this. Where if the stock continues up, you can make something, but if it goes down, you're not going to lose everything. And let's look at where probably need more than a month. So let me redo this. Probably go out to April. I don't know. You could probably go a little longer, but you do want, this is over a month, so we might get a little more credit. Something like that. Don't want to risk too much, but you want some credit here. You're going to get $1.41, but it does need to go the right way. Does kind of need to go the right way and continue to stay above 150. 150 is the support level here at the 50-day. Goes the wrong way, you've got the 145 to protect. You can always roll the short put down. Once you kind of get into that, it gets very tricky. And usually it's better to just take it off and try again a different way. So not my favorite, but it is another bullish option. It needs to stay above the short option strike price for you to make money. And you want it to expire worthless. So the stock needs to stay up for 36 days. Right here, 36 days. You can go shorter, but you do get less credit. And if it does that, stays above the strike price for 36 days or however however long, that gives you full profit. Now, if it goes up and you feel like you can book a profit sooner, you still have that option too, obviously. But for only getting $1 some odd amount of credit, it's not going to be very profitable unless it expires worthless and you get to keep all that credit. So those are some options that you'd consider. And let me finish this sentence. I typically prefer stock ownership, leap long call, or a leap bull call. I've done all the other ones, but they just haven't been as easy to use, and I guess naked short put is good, but I really just look at it as a way to get into a stock shares. But in general, I like these top three the most. You have more time, you have more of an ability to adjust things. If the trade goes the wrong way, you can close this short call on this bull call calendar. You can buy dollar cost average on this long leap. You can protect your stock ownership on stock ownership. So really, this is all I had. Just give you guys some ideas, start to think, and kind of give you a glimpse into all of the stuff we go through and look through to make good decisions. And it all just takes a little bit of doing some math, doing what you feel like works for you individually. Got a question, what do pivots represent on the chart? So the pivot points are another support and resistance price levels that we've noticed has worked at times. You can kind of see where it stopped here, kind of stopped here a little bit before it finally passed above it. They're just smaller short-term price points where it is likely there will be some buy and sell orders stacked up. Realistically though, we've got the biggest resistance level is 200, bullish moving stock. Really, that's the one we're going to be looking at as we're looking to find where to place strike prices on short calls with a bull call spread and that kind of thing. So any other questions or thoughts? I still went longer than I intended, but you know, I think that's okay for today. Fun to talk about this stuff, and if some of this just doesn't make sense, just come back and we'll go through it more. I'll go through some of the other short options and other instruments later on, option instruments. But I would say get your paper trading account up and start messing around with the option chain, kind of seeing what does what and you know what you can do. This one on E-Trade gives you a snapshot analysis that tells you you're going to make money, how much you're going to profit if it goes the right way, how much you're going to lose if it goes the wrong way, what your break-even stock price is here at 152, you know, depending on what trade you put on. So that is the most beneficial I've found in kind of getting to a point of understanding of all this. But kind of more to it than just an education, right? They're going to tell you all of this stuff, and it sounds so fun and exciting to look at bull put spreads and bull calls, and you know, the people really doing this in real life are keeping it more simple, are actually looking at our technical indications on where the stock's going, where our resistance of support levels are, and making the best educated decisions we can based off of that. So guys, thanks for joining me. Appreciate it. Just waiting for any of the last questions. Thanks, Jim. You guys have a good one. We will see you Monday. Just as some heads up, market is closed Monday for President's Day, and Still planning on doing a market commentary with Kevin on Monday, but if we decide to change it to Tuesday instead for that holiday, we'll definitely let you know. So, all right, take care, guys. Until next time.